So today we're seeing a lot of directional movement in the market, and it's not due to any one specific fundamental event that came out, more so kind of a change in the lay of the land where we're dealing with a potential banking crisis here in the US, and then that's kind of bounced over to the UK where we got some news this morning about that as well. And what we're seeing is we're seeing a massive amount of directional movement in the market because of a flood to the safe haven pair. So whenever the market is on edge or things get quote unquote risky, we see price or money flood to our safe haven. So your gold, your dollars, your yens. Now, we're not here to talk about that today. Today, I want to talk about a trade we actually analyzed yesterday. And, the point is not to be like, hey, we called this, we're super traders and make all the right predictions. If you guys have watched any of my videos, right, you know that I'm not about that at all. I can care less about that. But I thought it was a really good lesson to show you guys how we predict profit targets, because that's a really underrated element of trading. Everyone really puts the biggest emphasis on, how do I get in the trade? What's the signal? All this fun stuff. And in my experience of coaching, I've noticed that many traders fail not because they can't get into a trade, right? Getting the signal or getting into the trade or calling the right level isn't necessarily the hard part for traders, but they don't pay enough attention on where to get out. So they'll do stuff where they'll put their target profits too close, so they don't make as much as they should off the trade, or they'll put their profit targets too far away, so they're right in their prediction, but price never actually gets to the level that they have their targets at because they overshot them. So having the ability to analyze the market, in my opinion, profit selection comes from your ability to analyze the market, not just predicting where price action is likely to reverse or go in your favor, but where it's likely to go to. It is a massive skill. And you can see, even in a big directional move like this one in front of you, the market does respond to technical levels, right? The fundamentals may be the driver that kind of push the gas and tell the market how fast to go, but technicals are definitely the destination, and they'll tell you where price is likely to go to and where price is likely to stop at. And you can see this is a perfect example of price doing a massive directional move, yet running into trouble at the exact technical level that we predicted. So I'll pop you back in the time machine. We'll go back to, this was I think Tuesday's live trading room, where we analyzed the dollar Swiss and talked about how to really decide why to take one profit level over another. Hope you guys enjoy. If you're not subscribed, make sure you do so already. And do me a favor, hit that like button. It's the best way you can support the show. And also leave any comments or questions below. I will read through them and give them an answer. All right, enjoy. So this can be an interesting one on dollar Swiss, depending on where you're interested in taking targets at. We got a nice double bottom forming here. Now the question is, where would you be interested in taking targets at? If it's going to be that next VS1 level, then not a lot of meat on the bones there, so not a tradable opportunity for you. But if you're someone that's looking for a higher move, let's say you're ignoring, you say, hey, you know what, Akil, I'm not really worried about this, I'm shooting for here, then this is going to end up being an amazing trading opportunity for you. So once again, one thing we can use here, if we want to say, hey, how important is this level, in comparison to this level, is we can use our volume profile tool, right? Now, here's an interesting thing. When I used to, just kind of take you back in a time machine to talk a little bit about the evolution of trading. When I first started trading double tops and double bottoms, now keep in mind, when I first started trading double tops and double bottoms, I just traded every single double top and double bottom. I didn't take anything else into account. So take my lesson. That is a very quick way to lose a lot of money. But like double tops and double bottoms were the first things that made sense to me, right? They're I don't want to call them easy to understand, but they're simple in comparison to other things, right? It makes sense, right? Market goes down, little retest, little failure again, and boom. So my target level was always a 382. It was simple. 382, target 1, 618, target 2, every single time, right? And then I learned over time, like as I really developed my trading philosophy and structure became a major part of it, structure took place of just simply Fibonacci's. But when I first started, it was basically just double bottoms and fibs. I didn't really understand structure. I didn't really care about structure at all. So it's funny to go back to that. But if we want to look at these areas and say, okay, well, which is more important? This is the perfect example of why we use that volume profile. So again, we bring it in from the swing high to swing low. Take a look at this swing. And we ask ourselves, is there anything that stands out? Well, we have a little bit of a spike right here. A little bit of a bigger spike right here around our 3D2. The biggest spike in volume is going to come, I think we can all agree, right? In this area right here. I can even kind of move that down a little bit. Let's just call it this area right here. So we know by seeing that, right, if we're going to take this into account, is the 618 at this level of structure the ideal place to be in, you think? 93 even? Nothing wrong with that level, but it's a little bit above the danger zone, right? But that can also tell us that, hey, is there a little bit more meat on the bone from just trying to take it right here? Yeah, right? So this can be the qualifier that says, hey, you know what? I'm going to look for this 3D2 as my target one because it's right below this quote-unquote danger zone, and not necessarily take this or not necessarily be afraid of this area right here. So if that's the case, you got a nice little double bottom setting up here on dollar Swiss, ew, right? Where it's not technically, yeah, we just technically had it, right? So your entry would be at market. And I shouldn't make fun of the dollar Swiss. I don't like Swiss pairs. It's just a personal preference. There's nothing wrong. You guys can trade whatever you want. So I just joke around when I make like the weird noises, but don't be afraid of trading Swiss pairs or anything like that. Just my personal preference, not to just off of some past stuff. But let's say you're going for a 3D2. What's our ATR here? 35. See if this makes sense. 90, 71. 71 minus 35 is 36. Look at that, almost right there. So you got a risk reward that looks like this. So that's what the trading opportunity looks like for you. I'll get this into our pro trade log as well. It's a structure trade, double basically CTS trade. We're at a major level of previous structure. We got the RSI overbought. We've got divergence. CTS 2, 3, 4. There you go. Hope you enjoyed the video, and if you're looking for more ways to continue developing as a trader, I recommend checking out the Trading Coach podcast. I release 3 new episodes each and every week, every Monday, Wednesday, and Friday, and we basically cover any trading topic you can think of, not just trading, but entrepreneurship, self-development, things that are going to help you become a better trader, but a better person in life as well. So check it out, the Trading Coach podcast. It's available on your favorite podcasting app. Give it a listen. Let me know what you think.